question I get asked about from clients revolves around life insurance. Do I need life insurance? How much coverage should I need? What type of policy should I be getting? These often come up because a lot of people hear advertisements or brokers that are trying to sell them different life insurance policies. So most of the time they're trying to fit a square peg in a round hole, and they're really salesmen that are trying to just pitch you on different types of products. However, life insurance does serve a purpose for some people. So one of the main questions to ask yourself when evaluating a life insurance policy is, what problem does this solve? So the main factor with any type of life insurance policy is, what risk are you trying to take away? So what risk are you currently facing that you can get rid of and put into the hands of an insurance company? So a couple of things that might include would be, the major thing is, if anything were to happen to you, if you were to pass away, who is relying on you for income or assets? Who are you providing for currently? So if there are people in your life that need your income, that need you to be providing for them, then yes, looking at some type of life insurance policy is important to consider. Other things may be risk of a lawsuit. So if there's something that you have or that you own that puts you liable for any type of risk, then it's important, again, to offload that risk and put that risk onto the hands of different insurance companies. However, one of the things that is a big misconception involving life insurance, especially whole life insurance policies, is that is an investment. So using it as some sort of investment vehicle. There is one factor when you look at whole life insurance policies. There's ways that you could potentially loan that money back to yourself. It's a little bit of complicated strategy, typically reserved for high net worth people. So aside from that, typically whole life insurance policies are not a good fit. So now to talk about the difference between a permanent or a whole life insurance policy, and then looking at what is a term life policy. So for those of you that have dependents, or if you have someone that may be relying on your income or money if you were to pass away, one of the best policies to look at is a term insurance policy. The way that these term insurance policies work is you pay an annual premium, and most of the time you can pay that out on a monthly basis to the insurance company, and that policy states that if you were to pass away before a designated age or a designated year, then your beneficiaries will receive a lump sum payment. So for some people that might be $250,000, $500,000, $1 million, maybe even a $2 million term insurance policy. And these are good to have in place if you have things like a mortgage or tuition payments or ongoing expenses, people relying on you for your income that you are trying to support. However, one big thing to keep in mind, if you don't have children, you don't have dependents, you don't have anyone relying on you, you probably don't need a term life insurance policy. Unless you want to leave a little bit of money behind for a funeral, maybe put that money into an emergency savings account. However, if you don't have those dependents, then a term insurance policy doesn't really make sense. And the other difference with that is the difference between term and whole life. So with term insurance, it's one of those things that you never want to have to use. So you're paying money into it. It's not accumulating a cash balance. It's really just there, worst case scenario, and it's a policy you hope you never have to use. Whole life insurance policies or permanent life insurance policies are a little bit different. They do build up a cash value, and then you build that money up over time. If anything were to happen to you when that policy is in place, most of these do have some sort of rider or or some sort of benefit that you get at if you were to pass away, then your beneficiaries would receive a death benefit when you do pass. Please be aware of, if you're saving money into that on a monthly basis, there are much better options if you're purely looking at this as an investment account. So if you're looking for an investment account, do not open a whole life insurance policy thinking that you're investing that money. There are 3 or 4 different layers that go into the whole life insurance policy. There's things like commissions that broker would receive. There's investment management fees. There's actuarial fees involved in that, since it is a life insurance policy. And then there might be within that as well fees to the advisor, and then fees to the mutual fund company that is managing those funds within the plan. So make sure you're aware of each of the fees that are layered into a whole life insurance policy, because most of the time those are not very transparent and can sometimes be difficult to find. So if you are thinking, if you have some excess cash and you are determining if a whole life insurance policy makes sense, there are several different options that you should check the box off first before considering a whole life policy. So one, are you putting the maximum amount into your company 401k plan? Not just up to the match, I'm talking the full IRS contribution limits. Are you completely saving as much money as you can into that? Second thing, are you saving money into a Roth IRA? If your income is too high, are you doing backdoor Roth conversions? And then the third investment account that I would look at before looking at a whole life insurance policy would be simply a brokerage account. So a brokerage account, you can put money into that, excess savings, excess cash that you have, that money gets invested. If you were to ever sell it or pull the money out, you'd pay capital gains taxes on your gains, or if you have a loss there, you could write those taxes off against other gains or your income. But that third bucket of money I'd look at would be a brokerage account, because it's very flexible and you can use that at any time. Other vehicles, if you have kids, a 529 plan definitely makes sense. Maybe a UTMA account, kind of a custodial account for minors. I would look at any of those different accounts first before ever considering a whole life insurance policy as some sort of investment account. So again, to recap, life insurance policies, if you're ever looking at them, or if you're ever pitched one, or if you're evaluating it, first and foremost, think about what problem are you trying to solve? That's the first question to ask. Second question to ask, which is the similar lines, what risk are you preventing by having this insurance policy in place? And if you can't answer those two questions, then that life insurance policy most likely is not right for you. You should look at those other types of accounts that I mentioned, 401ks, SEP IRAs, Roth IRAs, brokerage accounts, 529 accounts. Look at those type of investment accounts first before immediately going and contributing into a whole life insurance policy. So I hope this helps. Again, much cheaper if you do need insurance to look at a term insurance policy that has a certain dollar amount and date in mind for that. Those are typically can get you exactly what you need when you're insuring against a certain risk. So hope that helps. If you like the video, go ahead and hit the subscribe button. Thanks guys, thanks for tuning in.